Oh, guys, let me tell you something. As you can see here by this ascending level of support, we've got some really stupid gorilla strength on the AMC chart today, baby. Holy Toledo. What is up, everybody? Welcome to Trey's Trades, where we freaking talk fast and hodl the mass, baby. I like to preface by saying that I'm not a financial advisor nor expert, so take it as a grain of salt. Let's get into the freaking video. So today, my friends, my family, my fellow gorilla gang, we're gonna give you an update on ticker symbol AMC here. Obviously, in case this is your first time watching a freaking Trey's Trades video, we're gonna go over the overall ortex data, which is the short interest data. I want to go over the short volume percentage ratio, so we have an idea of how much shorting has been taking place. I want to go over the Stock tracker, so you have an idea of how many shares are currently, available to short positions. Approximately, this is reported data, right, and does not take into consideration all exchanges. So keep that in the back of your mind as well. And I also want to look at Citadel's holdings and filings, because I think that's pretty fascinating stuff as well. It shows that we're actually making progress in terms of where AMC is doing damage to these freaking hedge funds. We've seen the numbers. We've seen the billions of dollars of liquidity that's getting pissed away by these short positions and their pride. And then we're going to finish out with the overall technical analysis and give you guys an idea of what I think might end up happening. But of course, like I said, this is a time frame where technical analysis kind of gets thrown out the window. So without further freaking ado, baby, let's get into the video. So we're gonna start off here with ortex, right? I want to start off with ortex primarily to show you one thing. I'm gonna say this every single freaking day. This is not a short squeeze. I'm going to tell you exactly why. Check this out. Return shares, 3.32 million. Borrowed shares, 3.75 million. Borrowed change, 424,000 more shares that have been shorted into the market, baby. That's 85.1 million. Not taking into consideration the failure to delivers, which are essentially options that end up expiring in the money. They don't have the shares available for those who exercise, and they end up sending out IOUs. Synthetic shares, right? Those end up essentially causing synthetic selling pressure. It doesn't also take into consideration the naked short positions that we don't know are circulating on the market, or any of the shares that exist in the market that should not freaking exist, right? With all of this, right, the last 2 days, we were up like 4.5% net short interest. Let's look at this overall trend line, guys. This is absurd. Check this out. 2 days ago, we were at 14.55. Now we're at 15.88. That is insanity. That's stupid. That's ridiculous. And look at the overall price action, guys. You know what's crazy about this? And we'll get into this more when we get into the technical analysis, but this is just pure, stupid, organic FOMO growth. There's nothing there's nothing about this that's a short squeeze. Maybe a little bit of gamma, right? There could be some gamma because there's unusual options trading activity, call options trading that's happening, but no way, shape, or form is this a freaking short squeeze, and that is what is absolutely sexy about this. We're sitting beautifully. Cost of borrow sitting about the same, has not gone up significantly, but that I'm assuming is because there are a couple of shares on loan that are still available. We've seen that max out about 155 million as the highest it's been, so I'm assuming there is still some ammunition that can be taken by short positions that are just not out there. And I have a hypothesis as to why the shares on loan has not been growing that much. Only short interest has. It's because lenders don't want to borrow any more stock. They don't want to lend out any more stock because they see the extreme amount of risk that is associated with this. If you saw my video about a forced recall, I think that is exactly the reason why the shares on loan is staying the exact same. I don't think it's going to go, maybe it'll go up more, maybe, but it doesn't make sense. Why would any sort of lender want to lend out stock to anybody? Why would you be taking on that extra risk for you as a lender to have any opportunity to go freaking defaulted on loans, right? It's probably not going to happen. So this is pretty much what you're looking at, right? It's a dirty, dirty number. I went over this in my live stream earlier, but in case you were not watching, I want to show you the overall daily short sale volume percentage, and this is absurd. The numbers are disgusting. 5 straight days we've been over 50%. We have seen 56, 57, 61, 60, and 53. And I'm very excited to see what the numbers are tomorrow, because as we saw, the short volume and the short interest were up today. They were, and still we're freaking crushing these short positions, guys. This is disgusting. This is as good as it freaking gets. There's shorting taking place, and this FOMO, this buying, the volume on the days, it's absurd. You can't beat it. I mean, that's essentially all that it comes down to, is the liquidity that comes into this stock right now is just destroying every short position out there. I mean, we saw freaking 1,460 million, right? So this is freaking, that's a lot of capital. That's a shit ton of capital, guys. That's absurd. That's a crap ton of money. So this is why the freaking shorts are just losing. That's as simple as it is. Now, the next thing I want to show you is a stock tracker that shows you the available shares to borrow. Keep in mind that this does not show all exchanges, and this is only showing reported data. As we know, there's a lot of malpracticing and a lot of malreporting that takes place from hedge funds and institutions that either lend stock or short stock, right? So this is probably only a trend. It's not the whole picture, but it's still useful because we can see that they're continuing to double down in positions. There's not a lot of available shares to borrow. You can also see there's a lot of call options expiring in the money. You can think of these as an opportunity to get hedged for. If these end up expiring in the money, guys, that's market makers that have to hedge, and if they can't deliver on those options that get exercised, failure to delivers. Synthetic stock. More freaking money that's got to get pissed into the stock market by the hedge funds and market makers that are malpracticing, corrupting, and committing to fraudulence on AMC stock, right? That are going to end up going into AMC ape freaking hands. So that is looking absolutely disgusting. Now, the next thing I want to show you is Citadel. Now, keep in mind these two periods of time, reporting period and file date. So the reporting period was actually on March 31st, and the filing date was on May 21st. And I just saw this pop up on my live stream today, so I dug into it a little bit. And this is some fascinating stuff. So I can't tell you the exact time frame. This reporting period could be like as of this date up until now, like up until that May 21st. Maybe this is like the time period in which they hold these two holdings. If you have a direct answer, please feel free to let me know, because I got to be honest with you. I'm just going to assume the absolute worst case scenario as of March 31st, this is what they had. And it was two holdings. They held two stocks worth about $6 million. No freaking way. I mean, the damage. We're doing stupid damage to these guys. Now, keep in mind also they have calls and puts on AMC stock, as well as about 750,000 shares. So this could be out of date. It very, very, very easily could be. But this is a way to show you the trend, the damage we're doing, because to go from freaking they have $6.9 million of net worth as of this last filing from previously in the billions. I mean, look at this difference. This is absurd. Check this out. If this freaking loads. Hold on a sec. I mean, that's an astronomical difference. $407 billion was their previous market value in holdings. So, holy Toledo, guys, we are really doing some damage on these shorters, these hedge funds and institutions that are betting against AMC stock and the freaking Adam Aaron and the company of AMC, and most importantly, the retail investors and the apes, man. I mean, we're doing it. It's simple as that. It's as simple as that, and we haven't even really cracked down on these guys yet. That is the God-honest truth. We're sitting at $19.89. The shorts have not covered in the least bit. You're still seeing the short interest go up. You might be seeing a little bit of a gamma squeeze, right? But this is not a short squeeze. Plain and simple. This is the beginning. This is the beginning of the end, in my personal opinion. Like, there's just no ifs, ands, or buts. Data is data. Numbers don't lie, man. Men lie, women lie, numbers don't lie. I'll tell you what, Citadel sure lies. So does Melvin Capital. So all these other freaking media and news sources that are trying to tell you this is dumb money. But guys, this is absurd. I cannot double down on this enough. This is pure organic growth in FOMO to a T. I said it yesterday in my video, guys. You want to see what FOMO really is? I don't toss that term around loosely. And it's for a reason, because this is FOMO. Seeing freaking 375 million in total volume in a day is FOMO. This is pure FOMO. We are still winding up. I mean, the strength on this is the most strength we've seen in AMC stock easily in the last 6 months. And we are knocking on the door of some all-time freaking highs. The highest this has ever gotten is $25 in the pre-market back on January 27th. And we are knocking on the door. I'll tell you what, right? I'm going to get into the technical analysis. I'm going to go over the overall trends and what you guys can maybe expect, a couple scenarios. But like I said before, right? Keep in mind, this is where technical analysis and trend is very tough to predict outside of intraday, very minute time frames, right? So check this out. There's two ways that this can go. If we break $20 and we break it clean, we break $20 square on the nose, it just pushes through and it continues on trend or it consolidates over $20, you're going to see lights out, man. You're going to see 23, 24, 25, 28, 30. It's going to run. It's going to be stupid. I think you'll be looking at a year-long high, a year-to-date high. I really do. I think that's ultimately what's going to come down to. It could happen in the pre-market, could happen now in the after hours. I mean, we've seen it before, right? And if it pushes through that $20 mark, you're looking at Tendy Town. You're looking at Kraken Kingdom. That's as simple as it freaking gets. That is a critical psychological barrier of resistance. And you can see here on the level twos, the ask has 98,000 shares waiting to get filled, trying to keep that down. A sell wall, trying to keep the retail investors underneath $20. That is a huge level. And if you get a clean break over $20, guys, whatever stock you own, whatever calls you own, you are ready to watch them start printing. It's as simple as it gets, right? Now, here's another scenario. If it tests $20, this is the worst case scenario, right? I'm not saying anything's going to happen. I think the first case is more likely just based on how things are going. But the RSI is obviously very extended. We have had nothing but freaking hour green candles for literally the last 2 days. So there's a chance, right? There's a chance that we end up getting a small pullback, and that's okay. I'm going to show you the actual day-long chart as an example of what to watch for what I mean by sell on the way down as we get further into the video. But anyways, worst case scenario, what happens if we end up breaking, but we don't get that push over $20 and it comes down, right? Well, you might have a little bit of retracement. This is obviously extended. And when this squeezes, it's not just going to go straight up. It is going to have rips and dips. It's as simple as that, right? It's the market. It's going to be volatile. That's why I'm saying this isn't a squeeze yet. This is just pure organic growth. Squeezes aren't slow burners like this. That's just the truth, right? This isn't a squeeze. Squeezes are violent, volatile moves where you get freaking swings of 50, 100, 150% that happen within minutes sometimes, half hour, hour, and it swings both ways, up and down and up and down and up and down. And you could be looking at that coming up here relatively soon. So I want to prepare you mentally for that, right? Now, if that happens, it tests $20 and it comes back down, you've got two main zones that I'm watching for. I'm not saying anything's going to happen. I'm preparing you for worst case scenario. The strongest level of support that we've got, and there's not much of any because it's been so straight up over the last 2 days, is this. You've got support where we had consolidation here in the pre-market and after hours on this day, sitting at about $17.24. If it were to break that, you're looking at a Fibonacci retracement zone between 50 and 61.8%, between what appears to be about 1605 and 1680. Now, I can't guarantee you anything, but if it drops down to there, that is the dip zone to buy, right? That's where I think you're going to get the most bang for your buck with the amount of FOMO, the amount of momentum, the amount of volume and volatility that we've got rocking on AMC stock right now, right? That's the worst case scenario. More likely one, just as yesterday's video, is you get a clean break over $20 and you're looking at the beginning of the move, man. That's as simple as it is. We called that 1450 move, right? The whole ape community recognized the importance of 1450. We saw how much of a violent swing we could have over 1450. And $20 is that next psychological barrier. What's after $20, my friends? Simple as it gets. You're looking at the all-time highs, 2580. That is going to be the ultimate level. If we get a new year-to-date high, guys, that to me, boom, freaking done. Simple as that, and that's what I've got for the video today. So blah, 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 you know the whole spiel. Drop a like, consider subscribing. Whatever you want to freaking do, my guys. Hodl on, my apes. And I want to leave you with one last message before we log off. To all those people who bared the laughing, the name-calling, the criticizing, peace be with you. That's what it's all about, my friends. Catch you in the next one. Much love and peace.